Hi traders, it's Alberto, and this is the continuing education for the Pro Traders workshop series. Today I'm going to go over the what is commonly known as top-down analysis. And one of the challenges for traders is to be able to determine direction of the markets on a daily basis. And it doesn't have to be difficult, and it actually isn't. It's actually quite simple, but you have to look at higher time frames to determine directional bias. So what I'm going to do, just remove these lines, is to just go over a very, very simple strategy, just using first using a 21 moving average line to determine directional bias. For example, here, if you would have used the 21 moving average line and just traded off the daily chart, you could have easily taken a trade back in February and stayed in, because price never broke above the 21 moving average line, and you would have made 2,000 pips. So of course, that in hindsight, that's easy. You're looking at a chart, of course that would be easy, but when you're actually trading, it's not that easy. So I'm going to show you a way that it can be quite easy if you just follow certain guidelines. So the first thing I do is every day I look at, we're looking at the pound Australian dollar. So what I look for is, one, the angle of the 21 moving average line, which is slanted down. Two, if price is either above or below, and of course if it's below, we're in a downtrend. So I'm looking at a daily chart. And then I highlight this area. So this entire time the market's in a downtrend, and anytime you see these green candles, those are simply retracements. That's all they are. They don't tell you anything other than the market's retracing. And this is crucial. This is very important to understand, because if you don't understand what I just said, you're going to have a very difficult time trading Forex or any financial instrument for that matter, because you have to know what is the overall direction of a pair. You don't care if the market's going north at any given time. You want to know what is this market doing overall. And we're going to use a daily 4-hour chart and 1-hour chart. Mostly the 1-hour chart is for entries. The daily and the 4-hour chart will determine what is the overall direction of the market, and the 1-hour chart, of course, we use for entries. Okay. So let's scroll down to a 4-hour chart. And so we know that this highlighted area represents the daily chart, directional bias. So the market's in a downtrend on a daily chart in this shaded area. But now we're looking at a 4-hour chart. We notice that the 4-hour chart at times breaks above the 21 moving average, but notice that it's short-lived. And most of the trades on the 4-hour chart are when price breaks below the 21 moving average line, and it simply is because the 4-hour chart is respecting the daily chart. Most institutional traders are trading daily and weekly charts. They don't trade the 1-hour chart, and they are 90% of the Forex market. So it would make sense and it would be logical just to trade in the direction excuse me, of the higher time frame. Now, that doesn't mean that you do not take counter trend trades, because I certainly do, but I know that those counter trend trades are short-lived, and I cannot stay in those trades for a very extended period of time. So let me go over a strategy I use on this simple 21 moving average line. There are no indicators, just price action, 21 moving average line. So I want to take trades in the direction of a daily chart. So I start looking for, number one, candlestick patterns. Two, price breaking below 21 moving average line. But even before it breaks below the 21 moving average line, I'm looking for candlestick patterns that indicate price exhaustion and it's ready to sell off. Okay. If you know your candlestick patterns, this becomes very easy. If you don't, then it becomes very challenging. So I would suggest learning candlestick patterns. There are only about 10 major candlestick patterns that you need to remember. to be able to trade this way. So let me just show you what I would do. I would look for example, this is very interesting trade setup right here, because if you notice this downtrend on a 4-hour chart, right, you would think that once it broke the channel, then it's safe to get into the north side, but it's going against the ebb and flow of the daily chart. So notice that this trade, even though this is a huge candle, and I would guess that this was probably a news event, notice that the price never went up any higher. It turned around and went south. And even this candle here that was supporting this trend line was short-lived and turned around and went south. And these are counter-trend trades. They're going against the ebb and flow of the daily chart. So yes, you can take this trade. There's nothing wrong with that. But just keep in mind that these are not going to keep going north. Okay, we don't have higher highs on the 4-hour chart. We have resistance levels, and the price excuse me, I'm sorry, then turns around and heads south because it's in a downtrend. So these trades that we see on the 4-hour chart could be confusing because they're going against the daily chart. So just remember that any trade that you take, even on the 4-hour chart, against the daily chart is going to be short-lived, because notice that price kept on going lower and lower. So instead of doing that, look for trades that at resistance levels that qualify. Here we have a bearish engulfing candle. Before that we had a indecision candle, so that would be a good trade to take. Here's the retracement, and then there's a sell-off. Here another bearish engulfing candle. And here's an inside candle, Horami. So these trade setups on a 4-hour chart worked well because they are supporting the daily chart. They're trades that we take in the direction of the daily chart. So if you took a trade here, you could have stayed in this trade for weeks because it just kept going down. But if you took a counter trend trade on a 4-hour chart, you would have to exit this trade because look, it went lower. You would have made money here, but you would have to exit that trade. Okay, so the safer trade is to take trades in the direction of the 4-hour chart. The next step I would do is, when I do see these trade setups on the 4-hour chart, then I would scroll to the 1-hour chart for a better entry. So maybe I see this on a 4-hour chart, and it's obviously that the market has finished its retracement. It's ready to go into direction, resume direction of the overall, the daily market. Okay, so I would go to the 1-hour chart for my entries. So if I look at the 1-hour chart, this shaded area, obviously this is a selling opportunity at a previous resistance level, and we have a combination of a hammer, an evening star, and a 1-hour chart. And if you missed that trade, then all you needed to do is draw a trend line on a 1-hour chart, and there's your trade. So these trades are safe trades because they're trades in the direction of the daily chart, and there's one, there's two, there's a trend line here. So each day, I know many of you get up in the morning, you look at the markets. If you're trading the London Open or you're trading the New York session, you're thinking, what is the market doing? Well, it's very simple. Look at a daily chart, look at a 4-hour chart, then scroll down to the 1-hour chart for your entries. And notice that all last week the pound Australian dollar just sold off. This is Friday, this is Thursday. A bit of a retracement on Wednesday, but it was short-lived. And here's Monday. And here was Sunday. Is that correct? Yes. Friday, Thursday, Wednesday, Tuesday, Monday was here. This is Monday's retracement. It's commonly known as Monday retracement. That's what it's termed. Here's the market sold off on Friday, and then Monday retraced, and then on Tuesday it resumed its trend. Okay, based on the daily chart, we want to look for trades based on a daily and 4-hour chart, and this qualified quite well. Okay, and you can go back. These highlighted areas that I put on the 4-hour chart, notice that they were candlestick patterns telling us that the market has reached its retracement. It was complete. You can use a channel, connect the swing points, and anticipate these trades to the downside because they are respecting the daily overall direction, which is down on the pound Australian dollar. So that's it for this video. If you have any questions, please email me. We do offer private coaching sessions for the Pro Traders Workshop series, and you receive a lot more videos. So contact me, either go to the website or email me and ask me if you have any more questions on our Pro Traders Workshop series. We are running a special for this coming spring, so email me about that. There's a discount on the Pro Traders Workshop. Have a good weekend. Thanks for watching the video. Talk to you guys soon.